What's up, guys? This is Joe, otherwise known as Catching BTC on Twitter, and this is Bitcoin Watch number 7, where I do technical and fundamental analysis on Bitcoin's price action, as well as set price targets and expectations for the future. So we've had a pretty interesting couple of weeks on Bitcoin. To say the least, we topped out at 13,900. I've already gone over that in the previous video, and we're seeing quite a big retracement happening, which I say I did expect, but I just didn't expect it to be this drawn out. Definitely didn't expect it to be this drawn out, but I'm going to go over it in its entirety now to see what to expect. Sorry guys, I'm just looking for this trend channel I had drawn on another graph, but won't worry about that. So I'm just going to put in some, don't want to be on cron, XPT. I'm just going to go put on some indicators on the larger time frames just to have a look at. Moving averages, 15, 50, 125 are the most important ones. I mean, sorry, 15, 50, 100, and 200, the ones you want to be looking at. Fib retracement, I'm just going to get the macro Fib retracement just to look what we're looking for. I'm also going to put Fib retracement on this whole parabolic move up, just to give us a brief idea of where we're really looking for. So currently we're trading at 10,300. I think we had quite a big sell-off yesterday from about 11,600. Well, let's just look at the moving averages and you know what we're looking at. So historically, this 100 move, no, the 50 moving average, you see here, it's offered varying levels of support throughout the market. I mean, we've only got, this graph only shows going back to 2017, but if I had the graph going back to 2012, you'd see a similar thing, and that it offers quite strong support. But saying that, the 50 moving average is now where the previous low was made earlier in July. Let me just lift this up. I think you're going to see that anyway. There we go. Yeah, so this previous, so the 50 moving average is where the previous low was made, and it's also where the 382 was previously. So I don't think I'm looking for this to be a market reversal point now that we're sort of sitting here. And as you can tell, we've hit it and we really haven't moved. If this was to offer strong support, it was to offer like a market trend reversal, we'd want to see something like this sort of price action here, these large wicks, where we sort of come in and you've got big buyers interested in this price zone, but that is just not what we're seeing at all here. If anything, we're just seeing a bit of accumulation here, because obviously there is going to be buyers here, silly buyers that think this is going to, the market's going to move here, but it really isn't. It's not to say a double bottom can't happen, the two lows here, but I just really don't see it being a point where the market will reverse. So if we look further down, the next sort of moving average support is around the 0.5 fib, 8.5k. That's currently, not to say that this isn't going to sort of trend back up until it can encounter a bit more sell resistance, sell liquidity, sell side pressure, and push down here. And by the time we get here, it may be further up. So I'm waiting to see how this plays out currently, but the sellers in the market are currently in control, and massively in control. So we'll have to see how that one plays out. But we do also have this trend line that was very respected here. I mean, it's just been generally respected throughout the bull and bear market. You know, it's got one market point, one market turning point, 2, 3, 4, 5, 6, 7, 8, potentially 9. So, you know, I don't, you know, we have tested this liquidity pool, but we could have tested it a bit deeper. And the fact that this trend line's here, you know, it gives me more reason to sort of think we may still turn around in this 382 region here. So I'm just going to plot some horizontal support around these levels. I mean, obviously in previous Bitcoin Watch, we've had these levels drawn out already because this is where we were targeting months ago, and we actually, you know, came down, got filled, and I rode it all up to here. I got out most of my position at the high here. I didn't want to hold on for too much longer because I didn't really expect it to, you know, it's just taking your profits and preserving them. Anyway, so this is really the liquidity pool, you know, the horizontal support that we're looking at. You know, and as you can tell, we've really barely, you know, this first wick here really barely dipped into it. You know, there's still a lot of buyers left in the zone which didn't get filled, which still might be waiting to get filled. But you know, my opinion is that if we come down here and we've got, you know, basically halfway into this liquidity pool where you'll see big institutional buyers, and we haven't managed to break the highs, then why would only a couple $100 lower give us enough buying power to push past this high and move up to make an all-time high? You know, I just don't think that's going to happen. But there's so many levels here that we're working with to make me think that that might actually happen. You know, but if we break below this moving average, it's possible that we're going to move lower. But anyway, so we have this trend line. We have two macro Fibonacci levels, and the 382 is quite an important Fibonacci level to you know, have as well, because it's bullish continuation, but it's bullish continuation all down to the 618. There's no reason we won't go that low. So I'm really waiting to see how this moving average and this trend line offers support before I make, you know, my opinion. And the reason, you know, in the Bitcoin Watch channel, I did think that we would continue going up, but I did say, if you are in a long position, we aren't aware of the selling pressure that's back up at these highs. So I drew a chart for them, and I said, you know, we're going to encounter a lot of resistance here. We're going to encounter a lot of resistance here, and we're also going to encounter a whole lot of resistance at the top. And that was mostly because of fib levels, fib confluence, fib extension confluence, all those, you know, horizontal resistance. And, you know, we ended up encountering this massive bit of sell pressure here. And look, so you've just given away, I mean, let's look at these, you've just given away a 37% profit. You know, this is why you have to take profits, and this is why I recommend everyone takes profits conservatively, because you shouldn't be trying to play the future, because you don't know when the market's going to turn around. You don't know if that was the final dip before reaching all-time highs. And so this is why I said, you know, always take profits out the 618 and major resistance levels, and, you know, be out at most before this high, before the previous high. You know, it's a bit different if you're playing the long game, but in this position, that was the right thing to do, and I told everyone to do that, and, you know, a lot of people didn't listen, but, you know, that's tuition fee for learning in trading. So it's just, you live and you learn. That's just how it is, unfortunately. But, you know, going back to the zone, you know, if we look at these moving averages, if we were to sort of have a little trend reversal here just to pick up some sell pressure and some sell side liquidity here, you know, there's no reason this moving average can't really move up to the bottom of this liquidity pool. Yeah, move up to the bottom of this liquidity pool, and this actually still is our market turning point, but we dip a bit lower. You know, so really I'm just looking for the next few days to see how we react, you know, because we are now trading in this liquidity pool and near the moving averages, so I'm just really looking for reaction. But, It's possible you could wick down into here, come straight back up and trade above this level. That's perfectly possible. But I think this is dangerous territory to be going leveraged in leverage positions. So I really recommend, if you're trading now, I think you should be just picking up spot Bitcoin for long term and holds. I don't think this is where you should be getting into leverage positions, because I just think that's dangerous at this point. I mean, anywhere from the 618 here, to here is discounted Bitcoin, in my opinion. I mean, this is good valued Bitcoin, which is undervalued Bitcoin for long-term investors. Below the 618, I think I'd be cutting some positions, but anywhere from the 618 to the 382, this is good valued Bitcoin. I don't offer financial advice, but for me personally, I believe that Bitcoin will be worth a lot more. Exactly. So for me, this is good valued Bitcoin. So I will be buying spot Bitcoin. I bought spot Bitcoin here. And I'll be buying spot Bitcoin further down. So it's just waiting to see how it plays out. But I'm just going to leave this level here, and I'm also just going to draw in the level that's at the 618. So the market templates here, around here. It's most likely break below anything. So we're just going to zoom in a bit just to go so we can get some more sort of Fibonacci levels confluencing with these zones. I don't think that's a word, but you get what I'm on about. So if we do some extensions from on the short side, if you take the low from here to the peak here, it's this 1618 matches up perfectly with horizontal support, Fibonacci confluence as well, and in around the 7.5 to 7.3 zone. I'm just going to get some more extensions in. Look here, the 2681 is lining back up there. So the 2618 is in this zone, and it's also below that low, which makes me more happy with this price level to go long, or at least purchase spot Bitcoin. And I will say that when the market is bullish and you're in a bull market and you're looking at macro fib levels on the sell side, you want to be targeting the most conservative level. So when you're sort of when I took the low from here to here, this is a big move. And so on the big moves, you really want to be targeting the 618. Okay, you don't want to be targeting 2618 because that will always be on the wrong side of the market and it will never get that low. Okay, so I really wouldn't expect the market to go any lower than 7.3 because you have the 618 here. You're going to have big buyers in this zone here. Like I'm talking big institutional buyers. So I'm just kind of waiting to see how this plays out. It should be interesting. If I just put some Elliott waves on this chart first, these are not the cleanest Elliott waves, and they never are going to be that clean, especially from a market bottom, but I'm just going to put some in here. So after a 5-wave impulse, you're looking for a free ABC correctional wave. And so for me, the reason I thought we'd make a market turning point here, and this was sort of a dip before we moved back up, is because I overestimated how strong the market was. And I thought this would have been our ABC wave here, but this is how buyers get trapped in. You get too bullish, and institutional buyers just keep dumping you, waiting for the market to dip lower. And this is what big players, market makers want. They want to pump the market up like this parabolic move up here, so that people get so bullish that when they come back up to these price levels, they can just continue to dump Bitcoin, and they'll be rebuying it at 7.5, 9K, and they make a lot of money off that. That's what they want to do. They want to trap retail buyers, trap buyers in the market, and just dump all their bags on them. But this ABC wave didn't actually end up being the actual ABC wave I was looking for. So now I'm looking for this to be the ABC wave, either down here, sort of at these highs and lows here, around 9K, or it's going to look a bit more like this, which, as far as the market structure is right now, I just don't feel like that's going to be the case. But if it does get down there, I'll be a big buyer, very big buyer, but I just don't see that being the case. I'm more interested in seeing a drop down to here, possibly a wick into sort of the 382 at 8.3. And there's also the Fibonacci 0.5 level here at 8.5. So, I really just want to see it dip here, wick here, and trade back into this liquidity and push back up. That's what I'd love to see, but it is perfectly possible for it to trade back down to the 618 and the 1.618 down here. This would be the biggest buyer support, which is where the market's kind of trading towards. But I could see it changing trend here. But we'll have to wait to see how that plays out. But anyway, so that's just a quick look at the levels I'm looking at and the levels everyone else should be looking at. And that's it, guys. I hope that was informative and helpful. And if you've got any questions, just send me a message, leave a comment, and I'll see you later.